Today's episode of Market Talk is brought to you by GrowMark FS. Keeping up on the latest in ag is a challenge, to say the least. There are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Tuesday, November 9th. I'm your host, Jesse Allen. Thank you so much for joining us. MarketTalkAg.com is our home on the web. MarketTalkAg.com. Find all of our streaming sources there and much, much more. Well, we are post-WASDE report here for the month of November, and it was a good day overall with a few surprises in these November WASDE numbers. Let's talk about it. Let's bring in our good friend Jim McCormick with agmarket.net joining us this afternoon. Jim, good afternoon, sir. And we were chatting a little bit before we went live. It was a good day with what many thought would be a pretty bearish day, especially on the soybean side coming out of this WASDE report.
No doubt about it. Now, we did close off the day's highs, but when you consider where we're at, 2025 higher, not a bad day. Like you said, the government, this number always tends to give you some bullish surprise. And today it looks like it was the bean market. They lowered the yield. I think the trade was really lean and thinking this big crop was going to get bigger, and it didn't get bigger. And that was the initial reaction to the market. It spiked about 50 higher when that number came out. And then it backed off a little bit because there was a little bit negativity in the fact that the carryout did grow. The difference was it only grew by 20 million instead of the 40 million the trade had kind of priced in. So the reality is, I think we just got a little bit too bared up going into this report. Mind you, Jesse, we had actually erased we had the October WASDE number, and the market bottomed a couple days after that, and then it had a nice little bounce. We'd given back all that bounce plus some going into today's number. So, you could argue the bearish number was priced in, and they faded it, which is kind of nice to see for American agriculture, especially those producers that have some beans to sell right out of the field.
It was very nice to see that yield coming in 51.2 with the production estimate 4.425. The average trade guess 51.9 on the soybean side. And you mentioned that carryout was actually raised up a little bit. I mean, looking at today, and you mentioned how we took out the October low yesterday, 11.99 and a half November beans, up 21 and a half today at the close. I mean, getting us back pretty close to that $12 mark has got to be a good feeling, just as, like you said, how much we've taken out of this market in recent trading sessions, Jim.
It definitely has. And there's some things that there's some positives and negatives that we need to keep an eye on the bean market specifically. On the negative side is the export side of the situation. It hasn't been that good. They did cut exports by 40 million. But, kind of looking at the glass half full, glass empty, the trade is thinking the crop is going to get bigger. It got smaller, which means they're probably not going to see this crop get any bigger even in January. But the demand is debatable. I mean, the Chinese haven't been aggressive buying, folks. Well, maybe what's going on is the Chinese are kind of betting like everybody else, like this big crop's going to get bigger. And now that it didn't get bigger, has it going to force the Chinese hands to come in and maybe get a little bit more aggressive on the buying side of the situation? Now, the other thing that we're kind of to keep an eye out on our group right now is the crush. They left that alone, and it is at a record all-time crush, but it's something we need to kind of keep an eye on. Earlier in the year, the bean market rallied on the strength of the bean oil, on the veg oil demand for the biodiesel. What's interesting going on right now in the meal market, if anybody's had to buy meal recently, has realized we've seen this massive spike in prices recently, and that has to do with logistics, that word we keep talking about. And the logistics we're now talking about, folks, is lysine. We can't get it in from the Chinese. That's where you import almost all of it from. And since we can't get that lysine in, what we're seeing is an increase in meal in the feed rations of the livestock. And with that, you're starting to see this meal start to catch bid, which is also going to provide some support to the market. So the old line was you never trusted a bean oil led rally in the bean complex. Well, the meal maybe that's going to take the leeway or kind of take the lead in supporting the bean market. So we'll see what the meal does here in the next couple of weeks. But overall, I think you got to be a little bit bullish. And if you're an end user, what the stories we're seeing tell us you probably ought to buy breaks.
Yeah, meal and oil both higher today, which was supportive to the soybean market. Let's look at corn. That yield 177, the number from USDA. That'd be a record. The trade average was 176.9. That's up from 176.5 in October. Production 15.062. But we think about this. I know the ethanol side, we saw that get bumped up with a 50 million bushel increase in ethanol production today. And it just felt like corn took the numbers in stride and pretty much just did what corn's been doing for how many of the last few trading sessions, just not really moving a whole lot, Jim.
Exactly. I mean, when you look at the adjustments they made, they did lower, the crop got bigger and they offset a big portion of that by raising the ethanol demand. Chose to leave exports unchanged. And when the net was, you got very little adjustment on the ending stocks. What, you go from a 1.5 to a 1.493? So the reality is we're probably at value. My guess is we're going to be kind of stuck in more of a sideways market near term as we go through the holiday season, simply because there's just not a lot of information we get. The December report's usually a reprint of the November report, and then the January will be the big one. So a sideways market action wouldn't surprise me. But there's some things just like in the meal that could be bullish is the ethanol side of the equation. They did raise the ethanol by 50 million, but we're not anywhere near record ethanol production at this point in time. And when you look at the crude oil price and you look at what's going on in the world energy wise, it makes total sense for these ethanol guys to keep going all in to make ethanol, not just domestically, but it's now working to go ahead and export it to the international people. So we should see demand for ethanol increase both domestically and internationally, which I think leads us to believe that this ethanol number is probably to go up at least another 1,500, maybe 150 million in demand. And then it comes down to the corn side of the situation. They chose to leave corn unchanged today. I know it was disappointing for export bulls, but the reality is we saw a really good export number early in the year. It's kind of backed off. But we really, Jesse, don't hit that export stride until the beginning of 22 and essentially late winter, springs, when we really start shipping corn exports. And I think we're going to keep an eye on what's going on in South America with La Nina, as well as their inputs. If that crop starts to shrink and the Chinese get a sense that this crop's starting to shrink, I would not be surprised to see China get in here and get really aggressive as they start trying to lock in their needs and trying to control food inflation. Inflation is a word everyone's on everyone's lips right now. Earlier this week, China came out and told their people to start stocking up on food supplies as a way to control, as a fear. So I think if you're looking on the demand side of the equation, I think you got to be optimistic as we move through the calendar years.
Well, and you mentioned as well, looking like corn might chop around a little bit here through the holidays, and I'd have to think that with all those factors ahead of us and the bullish tone that it feels like is underneath this corn market, 550 corn, 560 corn, that's a pretty good spot to at least lock in a floor right now heading through the holidays. If you haven't done so, or if you're looking to do a little bit more, at least to me, that feels like a pretty good place to start, Jim.
I think it's a good place to start. It's not a bad way. I mean, especially if you got a lot of bushels to do. Something we've talked about here is actually doing some straddles in the March contract, like the 550 straddle. You could pretty much, if you've got bushels you've sold, but you've also got bushels that you want to sell, you collect the straddle, you're collecting about 50 cents for a 550 straddle, which essentially says as long as the market's above $5 or below $6, you're going to kind of collect that premium. And I like I said, I lean to think this thing's going to trade sideways. Now, I would caution people, if you do a straddle, give us a call. We'll be happy to kind of walk you through it. But as you get to that the January WASDE number, I think you probably want to move out of any kind of straddles, because I think we're setting up for a very potentially bullish surprise on that number. But near term, it's not there, And if you've got a lot of unpriced bushels, Jesse, like you mentioned, it's probably not a bad idea to buy puts if you're nervous about it. But one thing we've learned about the markets this year is expect the unexpected.
Definitely expect the unexpected. On the wheat side of the equation, markets were higher today, led by spring wheat, kind of taking back over the lead there. I know USDA cut wheat imports 10 million bushels, cut exports by 15 million. We know, though, that global quality milling wheat stocks, they remain tight, and overall saw a marginal increase in wheat stocks. Walk us through what you saw with the wheat numbers on the WASDE report and some of your thoughts there.
I think in the wheat number, you said it best. They tinkered with it. They cut a little, added a little bit. They really went nowhere with it. I think what you got to draw from it when it's all said and done is the stocks are getting tighter. World stocks use around 36%, I believe. That's roughly the tightest it's been in 8 years. And there's a lot of uncertainty about the crop or plant and dryness issues and all that. I think the wheat's goal right now is to make sure it doesn't get too cheap. that it becomes a feed ration at this point in time there, with the supply there. So that should be underpinning. I think that should underpin the wheat market here as we go into the wintertime until we get a better handle of what this winter wheat crop is going to look like. And we'll see. It's definitely parts of the dryness issues. So I think if you're on the wheat side of the equation, you should be a little bit friendly, plain and simple.
And overall, I know we also had crude oil higher today, dollar lower. We focused on supply and demand, but also, we've been looking at inflation. We've been looking at all these other outside factors in the market. We got this WASDE report digested now, Jim. What are your thoughts on how this report could affect us moving forward? Is it going to remain a big focus here, you think, for a little while, or are we going to go right back to the inflation talk, et cetera, here as we go through the rest of the month and into December?
I would like to think it's going to keep fueling up, but the reality is we trade these numbers for about 12 hours and we move on to the next story. The next story is probably going to be the dollar. We'll see what kind of inflationary play that dollar is. It might have put a near-term top in, and that would help it. I mean, at this point in time, producers, they tend to back away from the market. I think this year, the Western Corn Belt's pretty much wrapped up harvest. The East is struggling. They're racing to get done before some rain moves in. A lot of producers are pretty much content where they are marketing-wise at this point in time. So I think it's going to be a relatively quiet holiday season at this point in time. But, when they say when we build into next year, there's a lot of what ifs. Like you mentioned, the world wheat supply is still relatively tight. I do believe this corn crop is going to get smaller. Now, something that was not brought up on this report, but I think it's going to be brought up in January, is what was left over of the crop we just finished, the ending stocks or the carry-in for this year. When you look what's going on around here in the Midwest, especially the Illinois parts of Indiana, you do not see the ground piles that you normally would see, which makes me wonder, where is this crop? Illinois' national state yield is 207. It's not the best ever, but it is a very strong crop. Indiana's crop is the best ever, but you're not hearing piles. And we didn't add that much storage, I think, in the last year when it's all said and done with COVID and everything. So the reality is, I think what that's telling us is the carryout from the old crop, the 1.35 carryout, it wasn't that big. So what I think you're going to see in January is you're going to see the old crop carry-in drop, which will tighten the ending stocks on this crop without any supply revisions. I wouldn't be surprised if crop stays the same. But like I said earlier, I do think the ethanol number is understated. And I think by January, they'll start having to raise that ethanol demand. And if La Nina really starts to take hold of South America, this thing could get really exciting going into 2020. Because the one thing we didn't mention is, on the fertilizer side of the equation, it kind of moved to the back burner this week because of the report. But the reality is that problem is not even close to being solved. And we'll see how much fertilizer we get on this fall before the winter kicks in. And then will people choose to plant corn? Are they going to choose to plant beans, milo, spring wheat? There's a lot of commodities right now that are relatively tight that there's going to be a bid on acres to get them to plant. So spring of 22 is setting up to be a very exciting time frame, I believe.
And I would agree with you on that. It feels like fertilizer's taking a back seat here a little bit, but it's going to come into focus once again pretty quickly. And, you mentioned South America a couple times as well, Jim, and I think we're going to start watching more closely the weather down there. They've had a good planting pace in Brazil and Argentina for the most part, and with La Nina issues possible down there. So I think South American weather, that's going to become another story here as well. That's maybe going to give us some news nuggets one way or another for our market trade going through the holidays.
No doubt about it. I mean, they're only halfway planted at this point in time, so they've got a long way to go. La Nina, Jesse, just didn't kick in like the weather guys are thinking. They thought La Nina would be really going full bore by now, and it just hasn't done it. But all the maps I've seen and all the forecasters I've read says La Nina is coming. And historically, when we get La Nina coming, you get dryness issues in parts of Brazil. You get dryness issues in Argentina, Paraguay, Uruguay. The Argentina situation get really interesting when you think about it, because Argentina doesn't export beans. Traditionally, they export meal. So all of a sudden, you got a situation where potentially the Argentina crop is down. They can't export meal. And then we look what's going on. Our meal market's getting hotter and heck because we don't have the lysine issue. This supply situation for animal feed could get really, really interesting potentially, depending on how the weather plays out in 2022.
Well, talking to animal feed, let's go over to livestock and let's talk about cattle and hogs here today. relatively quiet day after the report. I wasn't too surprised, especially the cattle side. We're kind of looking at this cash market for the direction here, and we've gotten some better cash sales here the last week or so, and looking for better yet this week. What are your thoughts with live and feeder cattle here on this Tuesday?
I think it'd be a little bit positive on the live cattle market. I think technically the market's struggling a little bit. We tried to make new highs yesterday, the other day, and backed off. But I think the trend's in the right direction right now. I think the cash market's going to continue to work higher. I'm very optimistic going into this holiday season. The reality is last year was a very tough holiday season for a lot of people due to COVID. They just did not get together. With where we are in hospitalizations, vaccinations, and all that, it does look like we're set up to see a lot of people travel and get together with their families. And I know beef is a little bit more expensive than it was a year ago, but I think when you look at where we're at as a whole, I think people are willing and wanting to have that joyous celebration and break food with their family. And I think that is going to lead to a stronger than normal beef demand going into the holiday season. So I think you got to be optimistic on the beef side of the equation. The hog situation then is a little bit tougher. We're getting a little bit oversupply in the hog situation. We're not, if it wasn't for Mexico, we'd really be in a world of hurt. Mexico's taking a lot of the pork that China isn't taking. But I think if the hog market watches the beef market, hopefully it'll find a little bit of kind of tailwind support from the beef market. But the hogs, I think, will struggle. The beef, I think you got to be a little bit excited about.
Yeah, that's a great point on the hogs, and that was what I was going to ask as well. Is it just feels like kind of lackadaisical, maybe a follower here. So we'll have to see what happens moving forward, and I'm sure weekly export sales this week will be another good indicator for both beef and pork. Jim, any other final thoughts you have for us here on today's show as we wrap up? I know we covered a lot and a lot of news with that WASDE today. Any final thoughts for us?
One thing, the only thing I just tell producers, as you wrap up your production, your harvest situation, you start looking at your books, consider what your marketing plans are for next year. I know our group has been relatively aggressive telling people to, try to get some of the 2022 beans protected. We're a little bit more negative beans than we are corn. I know it seems early to start your marketing plans for 2022, but the reality is the profit margins are there now. They may not be there 6 months from now, potentially. So, now's the time to start developing a plan. If you have any questions about it, you can call any of the Ag Market team members at 844-424-6758. We'll be happy to help you. We have a great app. You can go to agmarket.net and you can link off of that to our app, which helps you kind of develop a marketing plan. And we're here to help. That's what I'd say. So if anybody's got any questions, don't hesitate to get in contact with agmarket.net.
Well, again, that website, Jim said it, agmarket.net. You could find the team there. Jim, we appreciate the time as always. Thank you so much for joining us here today. Recap of the WASDE and more, sir, and have a great week. We'll talk to you again soon.
Thank you very much for having me on, Jesse.
Jim McCormick with agmarket.net joining us here today on Market Talk. That's going to do it for the Tuesday, November 9th edition of the show. I'm Jesse Allen. Have a great afternoon.